What is going on YouTube, and welcome back to another Fridge Financials video. And today's video we are focusing on Americans thinking the economy is terrible and everything sucks about the economy. So I found this article, obviously from Yahoo Finance. I always like to read these articles and figure out what in the heck people are talking about, what's around the news, and see what they're talking about here. And this article really piqued my interest. So if you're excited for today's video and you want to know why some Americans are living in a parallel economy, make sure you smash the thumbs up button, subscribe to the YouTube channel if you've not already done so, and turn on the bell notifications for all future uploads. Thank you so much for your continued support. We just passed over 150 subscribers, which is absolutely awesome. We're on track now to hopefully hit 200 by the end of the year. If not, even anything higher than that would be absolutely awesome. But anyways, let's stop with the lovey-dovey stuff of the Fridge Financials channel. Let's talk about the actual point of view here in this case. So again, this article talks about how some Americans are thinking that the economy is terrible. Okay. And again, starts off, is the economy booming or busting? Well, it depends on who you ask. And to an extent it does, obviously, because you think that, people are entitled to their viewpoints and everything else. One of the things that I've learned as a math teacher over the years is you can't argue data, you can't argue the facts. If here's the facts, here's the data, you can't argue against it. It's numbers. It's not an opinion-based thing. It's here's the data. You can't go against it, right? Also, as someone who teaches statistics, same thing. I always tell my students, you can't argue the numbers. If here's my data and here's my results, you can't say, nope, you're wrong, just because you can. It's backed by calculations, data, statistics, all that stuff. The official data is buoyant, economic growth is solid, the job market is strong, and stocks keep hitting record highs. Obviously, today we had a little bit of a sell-off here, but as you can see, Nvidia's over $1,000. I'm pretty sure that is an all-time high for them. SPY, before a little bit of a sell-off today, was also close to an all-time high, if not at an all-time high. QQQ, same thing. We had other stocks like, what else was at an all-time high recently? We had the SPY, we had the QQQ, we had the Dow Jones recently closed above 40,000 at one point. That one kind of sold off a little bit probably with the rest of the economy today. Apple's close to all-time highs. Microsoft's, if not already at all-time highs. Facebook, all these different companies have recently hit all-time highs. There's obviously been a little bit of selling off at some different stocks, but these have all, if you look at them recently, their all-time highs have been relatively new, right? So fact, you look at the stocks, highest point is your all-time high. Fact, there it is, right? So yet many Americans think the economy stinks. The economy stinks. Great word, great words. The latest gloomy indicator is a Guardian-Harris survey in which 55% of respondents say they think the economy is shrinking, and 56% thinks we're in the midst of a recession. Okay, interesting. Economic output, adjusted for inflation, grew by a solid 3% during the most 12-month period. The unemployment rate is 3.9%, and the economy created over 3.5 million jobs in 2023. And just to kind of look at, again, this is like shown like, oh, we have a decrease in hiring possibly, potentially, right? Like, oh, it's going down, it's going down. This one has a little bit, maybe of an increase in unemployment possibly. But if you take a look at some of these charts here that are zooming out, this is the all employees total non-farm payroll system for people that are getting paid. As you can see, we are hiring again at higher and higher levels. It keeps increasing and increasing and increasing. We had that little, period of the pandemic where people were obviously being laid off and things were closing down. So we had that huge drop off right here, but now we're hiring back to again, basically all-time highs again. Fact, this is in the last 10 years. So here's April 2014, and now we're up at April 2024. So it's not like you're seeing a decrease over time. Maybe month over month, you might have obviously some periods where you increase and decrease, of course. But overall trend is that we have a lot of hiring going on. And then they talk about how unemployment rates, right, are 3.9%. And it looks like, well, Fridge, look at that. It's kind of increasing a little bit. But if you take a look at unemployment rates over the last 10 years, you're looking at higher unemployment from 2016, 2017, 2018. Basically, we're at the same unemployment as about September and October of 2018 at 3.7, 3.8. Right now, we're at about 3.9. So we're actually basically at the same level of about April, May, if you want to go in between those ones. Huge unemployment, of course, because again, when you stop hiring, unemployment goes up through the roof, so about almost 15%. But then we've had it kind of be brought back down, which again, that's because people are continuing to hire now again. We have more demand for things, the economy opened back up, people are hiring more and more and more and more and more. Can't argue it. This is the data, right? You can't be like, unemployment's at an all-time high. It's not. It's pretty close to an all-time low, actually. All-time low we're looking at is 3.5, 3.4. No, that's not even all-time. That's the last 10 years. The lowest of the last 10 years is 3.4. We're at 3.9. Not too far away, honestly. But, let's keep reading through it. So you basically can't have a recession when the economy is growing and employers keep hiring at this rate. But this Harris poll isn't a one-off. A leading measure of small business sentiment is near recessionary levels. So are some consumer confidence surveys. So consumer confidence, again, it talks about how confident the consumers are, like you, like me, how confident we are. And if we're not very confident in the economy, people start to freak, panic, sell-offs possibly, whatever the case is for stocks, everything else. The Guardian Harris survey also found that 49% of respondents think the S&P 500 index is down for the year. What? Huh? I'm sorry. Hang on, did I can't believe I read that right. I can't believe I read that right. It is up. Can I even do a percent on this? Let's take a look. Let's do percents. Why not? Because I'm a percent guy sometimes, Let's go to percent. Let's go to, where is it that I can, year to date. Huh. Up 10% this year. Interesting. But you're telling me 49% of the respondents think the S&P is down for the year. Okay. Let's look 1 year out. Huh. Okay. Let's look 2 years out. Oh, cool. 5 years out. Oh, cool. Obviously, the max is like 1,000%, which is crazy. But what? Where are we getting this from? 49% of respondents think the S&P index is down for the year. Are you kidding me? Where do you see this? Am I looking at a chart that is just not real life? Am I looking at a fantasy world right now, or are they in the fantasy world? What are we talking about here? Okay. In reality, stocks have been ripping. The S&P is up 13% this year before the market kind of had a little bit of a pullback, and on top of 24% gain last year. Something seems off with the Guardian Harris finding that half the Americans think the stock market is in decline. Yeah. But in a different survey, Gallup found that 62% of Americans own stocks. That is absolutely wild. Mostly through retirement and investing accounts. If that's true, wouldn't most or all of those people know their portfolios are gaining value? Unless they don't check their retirement accounts, I guess. I'm always checking mine week to week, month to month, year to year to see how I'm doing in my retirements and everything. Interesting. The Guardian Harris poll didn't specify how many respondents own stocks, but these two surveys seem to conflict. People know how much money they have, and the stock market investors are either underrepresented in the Harris poll or overrepresented in Gallup's. And this is something that I have taught my stats students, my statistics students, every single year. They have what's called the overrepresentation and underrepresentation, and it can lead to biased ways or biased views, right? If you have a majority in this poll from the Guardian Harris, if a majority of these people don't even have stocks, don't even invest, don't even follow the economy, they just hear things probably through word of mouth, through colleagues, through coworkers, friends, family, neighbors. They don't look in the actual economy. They don't look at the stocks themselves. And that's bad because that leads to bias. You're telling me that almost half of the people that surveyed from this think our economy is in a decline and our stocks are down, the indices are down, we're heading to a recession when the polar opposite is actually happening. That's crazy. And we talk about that all the time in my stats class. I say, guys, you have to understand this. If you don't have an equal representation in your polls, in your surveys, in your data, it's going to lead to a certain bias. And this is the problem that we're seeing right now. Either they were underrepresented in the Harris one, which could be a case, right? Or they were overrepresented in the Gallup one. Maybe they only focus on certain people with certain net worths, right? And not covering everybody, because higher net worths means you have more investments in stocks, or you own stocks, right? But maybe you have somebody who might be, living paycheck to paycheck who can't put money into stocks. And they're not being accounted for here. Maybe you miss those people, right? That's insane. So what in the crap is going on here? Statistical anomalies probably explain part of the reason why polls show people to be remarkably dour about about an economy doing pretty well, but it would be a mistake to think that this is just a measurement problem, or worse, to think that many people are just too dumb to know how good they have it. This guy has a whole viewpoint. I think it's kind of funny, actually. So this talks more about the whole thing. This is the link from the Yahoo Finance thing. And so look at this, right? Nearly 3 in 5 Americans wrongly believe the U.S. is in an economic recession. We're currently in a recession. The majority blame the Biden administration, according to a Harris poll conducted exclusively for The Guardian. The survey found persistent pessimism about the economy as election day draws closer. The poll highlighted many misconceptions people have about the economy. 55% believe it's shrinking. 56% think that the U.S. is in a recession, though the broadest measure of the economy, the GDP, has been growing, which we'll talk about that a little bit more. 49% believe that it's down for the year. 49% that think that employment is at a 50-year high, and the unemployment rate is actually at a near 50-year low. What are we on about? What is happening here? Where's 50? 50 years from now would be what? 74? Here's 74. Right about there. Look where we're at. What are you on about? What? We're at a 50-year high. 50-year high was up here at 15%. Are you kidding me? Oh my goodness gracious. What is happening? Many Americans put the blame on Biden for the state of the economy, with 58% of those polls saying the economy is worsening due to mismanagement from presidential administration. Okay. State of the economy? We're at all-time highs in the market. The poll underscored people's complicated emotions around inflation. The vast majority of respondents, 72%, indicated that they think inflation is increasing, when in reality, the rate of inflation has fallen sharply from its post-COVID peak of 9.1% and has been fluctuating between 3 to 4% a year. Now, here's the thing to understand also with inflation, right? Inflation is, the rise of goods and services, costs, and everything else, right? And here's your peak at 9.1%. Inflation has been dying off. Now, the one thing that I want to make note of, and it's my personal view of this, and again, I'm not a financial expert, I'm not someone that works on Wall Street, I'm not a financial analyst, but just from me looking over charts and looking at data and reading these articles over the years and trying to get an understanding about how this might make sense possibly. If you think about it, pre-pandemic inflation was about 2.5%, maybe 3%, 2%, 1%, we have smaller values right here. Even though inflation is still cooling off, people are just like, well, Fridge, how are you going to tell me that inflation is cooling off? I'm paying higher than ever. Your inflation values are still higher than the pre-pandemic CPI data, which is, again, is our consumer price index, which is a measurement of inflation, right? So our inflation back here, about 2%, 2.7, 3%, give or take, we're still at a higher inflation rate compared to before the pandemic. So you might be looking at I was paying a crap ton more for groceries up here. I'm still paying more, which you're not wrong. You are still going to be paying more because prices are only going to keep increasing as time goes on with inflation. But people are still looking at it as saying that I'm still paying more. Stop saying inflation is down. Stop saying inflation is down. It's down from the all-time high of it's down from the high of 9.1%. It is still higher than pre-pandemic levels. If we chart all the way back here, the last time we had what are we at right now? 3.4%. The last time we were at 3.4% was November of 2011. 2011 was the last time that we had the same inflation as we do now. So you're looking at, 13 years of having lower inflation, and now we're having it a little bit higher now. It's still coming down a little bit. It's getting there slowly, but we're still paying higher and paying a lot more because of that. That's my personal view of it. We still have higher prices because it's still higher than before, but it is going to happen. In April, the inflation went down. A recession is generally defined. This is important. A recession is generally defined by a decrease in economic activity, typically measured as the GDP, which is the gross domestic product, which has a bunch of measurements into how the U.S. economy is doing, how China's economy is doing, how Germany's. It's about how all the different countries' economies are doing is based on GDP. A recession is defined by a decrease over 2 consecutive quarters. Although the U.S. National Bureau of Economic Research has the final say, U.S. GDP has been rising over the last few years, bearing a brief contraction in 2022, which they just said it was not to be deemed a recession. So again, we only had on the paper, on record, we only have one recession recently, which was 2020 pandemic levels. Everything shut down. Economy was at a halt. Those kind of things. The only recent recession was in 2020. Yep, I said that. Thank you. But the road to recovery has been bumpy largely because of inflation. Oh, look, here's the inflation chart again. Look at that. How cool is that? Despite previously suggesting the Fed could start lowering rates this year, Fed officials have now recently indicated interest rates will remain elevated in the near future. While inflation has eased considerably since its peak in 2022, officials still continue to say inflation remains high because it remains above the Fed's target of 2%. They like to go for 2% for inflation year over year. So things increase in price about 2% every single year. So we're still at 3.something%. So the job isn't done just yet. And these rates are still staying higher because of that, because we're trying to cool off the economy still. We're trying to pull it back a little bit more still. So these rates are going to stay higher until we see inflation really start to cool off closer to that 2%. Then you're going to start to see some potential rate cuts happening. So even though economic data like GDP implies strength in the economy, there's a stubborn gap between the reality represented in that data, which economists use to gauge economic health, and the emotional reality that underlies how Americans feel about the economy. In the poll, 55% think the economy is only getting worse. Love that. Now, Americans are clearly still reeling from price increases. In the poll, 70% of Americans said the biggest economic concern was cost of living. About the same percent said that inflation was top of the mind. Inflation has been the talk of the mind ever since we had the money put into the economy. We had the stimulus checks going out, and we pumped trillions of dollars into the economy to revive it, or to revamp it, I should say. So this article talks more and more about it. It's difficult to be happy about positive economic news when I feel financially squeezed each month, and that the economy was worse than the media made it out to be. Another thing that hasn't changed. Views on the economy largely depend on which political party people belong to. Republicans were much more likely to report feeling down about the economy than Democrats. Why is that? Joe Biden's in office, who is a Democrat. Obviously, the Democratic parties makes a huge difference. The vast majority of Republicans believe the economy is shrinking, inflation is increasing, and the economy is only getting worse overall. A significant but smaller percent, less than 40%, believe the same. Obviously, opposite parties have these strong viewpoints, have these, mentalities, have these different things. Again, I don't go either way. I stay just neutral. So this is not me saying like, yeah, you're right, or yeah, you're wrong. Like, I keep it neutral. I keep it short, simple. Here's the facts. This is what the polls are saying. This is what data talks about. Go from there. So I think both Republicans and Democrats can agree on. They both don't know who to trust when it comes to learning about the economy. Okay, that's also kind of scary to read about. The economy continues to present major challenges to Joe Biden in his re-election bid, though he has tried to tout Bidenomics or his domestic economic record, including his $1.2 trillion bipartisan infrastructure bill. 70% of Republicans and 39% of Democrats think that he's making the economy worse. And there's one thing here that I wanted to read about where they made a very, very good point. Maybe it was back in this article here. Let me see if I can find it. There's a really, really good point that I've been saying for years about the election and everything else. Is it here? This right here. I wanted to bring this point up because, and then I'm going to wrap up the video here, because I just can't believe that people are thinking that, S&P is down, we have the highest unemployment rates, when the data does not say that. There's a good chance the economy would have looked more or less the same from 2017 to 2021 if Biden was president instead of Trump, and the same for the last 3 years if Trump was in office instead of Biden. So this is basically talking about how if you flip-flop the presidents from this year period to the previous year period, and you flip-flop it, there's a good chance the economy would have looked more or less about the same. There might be a little bit of fluctuation, but there's only so much that can really be happening here, right? So the factors that have changed the U.S. economy in the last few years are more influential than anything Trump or Biden has done. It's not like people show up, and this is my major argument I always have. People are just like, oh, thanks for the $3 something price, Joe Biden. President Trump had $1.79, right? It's not like Joe Biden wakes up in the morning and is like, I'm going to make gas $4 today. Why? Because I don't care. And it's not like he can wake up and be like, BP, ExxonMobil, Shell, whatever, Chevron, bring your gas down to $1. Why? Because I said so. That doesn't happen. That's not a thing. They don't just wake up and just make these calls about these prices, about these inflation things, and everything else. Now, of course, when it comes to stimulus and everything else, yes, pumping the money into the economy is a stimulus thing, and Joe Biden did sign off on the stimulus and everything else. Trump signed off on the smaller stimulus as well. They both signed off on those kind of things, which goes to their table, goes to their desk, right? But there's only so much. Trump enjoyed a benign economic environment, and importantly, American shale energy firms were competing for market share with Middle Eastern oil deals, which led to overproduction and low gas prices for consumers. On the other hand, Trump got slammed with the COVID outbreak in 2020 and the madness of lockdowns and business closures. There's pros and cons to both. Biden took office as COVID vaccines were rolling out, which was exciting because people were like, oh my God, we can start opening up the economy again, allowing a gradual return to normal. But COVID disruptions But COVID disruptions generated the inflation that's been the bane of Biden's presidency. Very true. Russia's 2022 invasion of the Ukraine sent energy prices soaring just as the OPEC nations were cutting output and American drillers were focusing on profitability over market share. All of that pushed energy prices higher. Fuel, gas, energy pushes up. So the thing is to understand is that, first of all, if you are somebody who thinks the economy and the stock market is, if you think the stock market is down for the year, which half of the people in this poll did, please subscribe to Fridge Financials, because I will keep you informed about how our economy is doing, to the best of my ability, of course. It just goes to show that, and the point of this video is to understand that when you're looking at these articles, you're reading these polls, you're reading these data, you're reading these researches and everything else, you gotta be careful with when you read data. Because depending on who you ask, who takes part in it, it can push this biased viewpoint and make you believe something that is not true. This is a prime example. Unemployment's at nearly a 50-year low, not a 50-year high. We're hiring still at some of the highest rates. We still have a high hiring point right now that we have enough payroll. The S&P is up 13% at the time of this article. It's up like 10% now at the time of making this video. It's up 20% last year, so it's up over 30% in the last 2 years. We're not in a recession. Recession is based by GDP. We've had a growing GDP, not shrinking, it's growing, which means our economy is growing overall. I feel like people are thinking that our economy sucks and it's shrinking because inflation is still kicking around. And I still stand by my viewpoint of saying that when you look at inflation, we have higher interest rates, or we have higher inflation rate right now compared to pre-pandemic. So yes, we're still paying more than we did 5, 6, 7 years ago. 100%. Can't argue it. But does that mean our economy sucks? Absolutely not. It does not. Looking at the overall health of our economy, we are one of the strongest economies, and we have done some of the best ever since the pandemic has come out. So, just my 2 cents for that one. But if you made this far in the video, we're at 23 minutes. Good Lord. I've been trying to make it as entertaining as possible. Hopefully you guys stick around for it. If you made it this far and you're not subscribed, you just wasted 23 minutes of your life. Just kidding. Consider subscribing, of course, as you always do. And make sure you smash the thumbs up button as well. Leave any comments you have, any ideas, opinions. I'm always open to reading your viewpoints and your opinions, as long as we keep it civil and everything else like you guys have always been doing. So thank you so much for watching today's video. I hope you guys are making money in the market, just like everybody else has been doing the whole year. And I will see you guys in the next video.